Hey everybody, I'd like to introduce you to one of the speakers at our upcoming Launchpad event, Ron Diamond. Hey Ron, thanks for being on here with us. Please introduce yourself and tell us about your background.
Great to be here. Thank you for having me. My background, I ran a hedge fund and for about 10 years and I sold it and then I started investing. And I got into this family office world. It was very serendipitous. I would invest in the private market, so private equity, venture capital, real estate, credit. And what my thought process at the time was I would just put a little money into a deal. During my hedge fund, they didn't call them family offices, they just called them rich people. So there were a bunch of rich people who are now called family offices. And I just figured if I put 1 or 2 million into a deal and I can get 98 or 150, whatever, of other people's money, I get better deal flow and execution. And that's basically what happened. So it wasn't a business per se. It was a way for me to get better execution in deal flow because I could place more money. The company morphed though. And what I found was that this family office world is absurdly inefficient in general, fragmented and siloed, and it needs to come together. You've got 68% of the family offices started since 2000, and half of those started since the crash. So it's very, very new. And you've got roughly 17,000 family offices in the world, and you've got $10 trillion in capital and $65 trillion coming downstream. So it's a bigger market than the private equity market. So it's massive. The problem is that a lot of the people in the family offices, they made their money selling widgets or Beanie Babies or chain of gas stations or whatever it was. And it's a completely different skill set to do that, which is terrific, than to take $1 billion, grow it to 2, not spoil the kids, do some wealth transfer, do some philanthropy, do some estate planning, and grow the asset base. So what I found was you've got all of this money, $10 trillion. And again, I'm generalizing, but in general, it's in inefficient hands. So what I've been trying to do is I'm going to be the director of, we're putting together a family office initiative, which will become a center at Stanford University. And my thought process is pretty simple. I believe that as family office, as private equity and venture capital disrupted the public markets in the early 80s because it was a superior model. I mean, you can't run a company and report to a guy like me or an analyst every 90 days and run a company efficiently. So the private companies were a better model. You're basically getting 2%, which covers your overhead, 20%. I make money only if you make money. The problem is, and again, this is a generalization, many of these private equity and venture capital firms, they bastardized the business. Some, not all. And they became too big. And what should be a $300 million fund became a $3 billion fund. And the whole model with the private equity and venture capital is to turn these companies every 3 to 5 years because that's how they're compensated. The family office model is a superior model in many instances. If you're looking to sell your company, if you've got a company, you're looking to flip it at the highest number, family office is not the right place. But if you're looking to maintain integrity and maintain a legacy for the family office, for the company, family offices are a great alternative. So what we're trying to create at Stanford is an ecosystem where basically what we can do is enable family offices to become more efficient, less siloed, less fragmented. And then for the family offices like the Pritzkers, the Crowns, the Dells of the world that have already institutionalized it and they compete directly with Blackstone, give them a safe area to network and share best practices. So that's what we're doing at Stanford. We had a conference a week ago, literally. Kirkland & Ellis and EY sponsored it. And, it was virtual. I'd never done this before. We had 800 family offices from 6 continents on this call. So I think there's a huge need. There's a big demand for this. And what I believe is that as private equity and venture capital disrupted the public markets in the early 80s, I believe that family offices are starting to and will ultimately disrupt, not replace, but disrupt the private equity and venture capital companies today. And I'm just putting together an ecosystem. And it also involves, it's not just about creating alpha. It's about philanthropy. It's about succession. It's about governance. If only 25% of family offices make it to the second generation and 10 make it to the third and 5 make it to the fourth, the model doesn't work. It's a flawed model. I'm trying to change that. So at the end of the day, from a macro standpoint, I'm trying to take a massive industry, give it a little bit of, guidelines and infrastructure, and hopefully that will help A, from an investment standpoint, and B, from a holistic standpoint, where a lot of these families can solve these big world problems. And remember, again, my main goal in this is, if you look at what happened with COVID, they said, 10 years to find a vaccine. Well, what they did is they said, this is now a world emergency. So they got all of the resources of everybody, and in 9 months, they figured it out. Well, what if you had just said, well, it's a world emergency for cancer, or a world emergency for Parkinson's, or whatever it is? So I believe that these family offices, if you look at like what Michael Milken did, my father passed from prostate cancer at age 57, which is how old I am. When he got out of jail, when Milken got out of jail, he did more for the cure of prostate cancer than any human being. And because of him, you, I, and all the male listeners, if we live long enough, will die with prostate cancer, but not of it. You look at what Gates did with the vaccine. I believe that family offices can make a big difference in a lot of these big world problems. And again, you can't run it exactly like a business, but you could certainly run it more like a business. And that's really what excites me. And that's what I'm looking to do. I'm literally at the intersection of prosperity and purpose. And I think we can make a big, big difference. So I'm very much looking forward to your conference.
Wow, well, that was quite a lot. I appreciate that. So you spoke really macro, and I just want to zoom in on the micro and talk about real estate specifically, and what you and your partners, your clients are focused on today in the real estate space, and also more specifically, talk about not just the deals and the markets and things like that, but also the sponsors. Who are you looking to partner with, and how you go about finding and vetting those partners?
I'll answer the second part first. Again, this is not what I do. I just, in my opinion, Kirkland & Ellis is a top law firm for family offices. So I called a friend of mine, Ryan Harris at Kirkland, and I said, I want you to be one of the sponsors. I also believe that EY is the best accounting firm for family offices. Again, this is my opinion based on my experience. So I called Bobby Stover, who runs the family office practice at EY, and they basically bought into the vision. And the beauty of what we did is nobody sold anybody anything. Typically these conferences are more of a pay to play. Here, they underwrote the whole thing, and we had incredible speakers, family office speakers speak. So that's, again, I've already had about 8-10 family different sponsors reach out to me if I want to do another one, and we will have another one at Stanford coming up soon. To answer your first question, in real estate, I think there's gonna be some real great opportunities. I think single family rental is a huge opportunity for family offices. It's become a big trend. We work closely with the Jaggi family office, who I wouldn't say they created this, but they were certainly one of the pioneers. They've been doing this for 10 years. So that's a really interesting asset class in real estate. I think that multifamily will continue to do well because more and more people will rent. Office, I'm not sure. Office is a flip of a coin. I'm not putting a lot of money into it. I think there may be opportunities there, but I just still don't know how this is going to play out. So those are the assets that I'm looking at. And I also think hotels and hospitality, I do think this is going to be like the roaring 20s. And I think you're going to see huge opportunities there.
Good stuff. Appreciate it. Well, thanks for those insights. And we all look forward to getting more of your perspectives at the conference.
Thank you for your time. I appreciate it.